there's a number of classes of sellers. The bankruptcy estates like FTX bankruptcy, Genesis bankruptcy, a lot of these people have billion-dollar positions of Bitcoin and other crypto assets, and they're not long-term investors. They're just looking to unwind and get their creditors whole or unwind the trust. Cardano and Ethereum aren't stable coins. They're crypto tokens, which are probably unregistered securities. And so Cardano has been designated as an unregistered security by the SEC explicitly in lawsuits. Ethereum is this massive gray zone.
Michael Saylor begins by highlighting the significance of the Bitcoin halving event. Currently, approximately 900 Bitcoins are produced daily by miners who often have to sell these to cover their operational costs, such as electricity and debt. This amounts to around $23 million worth of Bitcoin entering the market each day. However, around April 2024, this production rate will be halved, reducing the daily supply to 450 Bitcoins. Saylor predicts this halving will be the most consequential in Bitcoin's history. By effectively removing about $8 billion of Bitcoin supply annually, it could create a significant supply squeeze. If organic demand exceeds the new, lower supply rate, the lack of natural sellers will drive prices up. He projects that by 2028, the daily production will drop further to 225 Bitcoins, making new supply a negligible factor by 2032.
Bitcoins, right now there are 900 Bitcoin naturally produced every day available for sale, and the miners generally have to sell them. They have high electricity bills and high debt bills and build outs. Around April 20th, that'll be cut in half. That's 23 million a day or 20-something million a day. That's like taking $8 billion a year of supply out of the market. It will be the most consequential halving in the history of Bitcoin, in my opinion. It will create a squeeze. It means at that point, if the natural organic demand is in excess of 25 million a day, then there is no natural seller. So it's obviously very bullish for the asset class and for Bitcoin holders. I think that by 2028 you'll be down to 225 Bitcoin a day. It'll start to become second order, and by 2032 it's a rounding error in the noise. There's a number of classes of sellers. The bankruptcy estates like FTX bankruptcy, Genesis bankruptcy, a lot of these people have billion-dollar positions of Bitcoin and other crypto assets, and they're not long-term investors. They're just looking to unwind and get their creditors whole or unwind the trust. So they're the big natural sellers right now.
So they were flushed out of the system?
And they're getting flushed out of the system. And then I think the miners are the persistent natural sellers. Otherwise, the volatility in the system, it comes, the primary volatility is that Bitcoin is cross-collateralized and cross-traded with the other crypto assets. It's an unregulated market, traded offshore 24/7, 365. There are many, many billions of dollars of Bitcoin held offshore. There's $400 billion of ETH in the market cap. There's 80 billion and 80 billion of Solana and BNB right now. If you had $1 billion of crypto tokens offshore, you could post it as collateral and you could do a $10 billion trade in an hour on Saturday night, unregulated, unreported. So the Wild West, the number one source of volatility, in my opinion, is unregulated offshore after-hours crypto trading. The second, the lesser source of volatility is the options and the futures and derivatives market onshore during normal trading hours in the Western world. But I think that although they are capable of face-ripping trades, the degenerates in the crypto ecosystem put them all to shame in terms of what people will do. Cardano and Ethereum aren't stable coins. They're crypto tokens, which are probably unregistered securities. And so Cardano has been designated as an unregistered security by the SEC explicitly in lawsuits. Ethereum is this massive gray zone. So at the end of the day, Bitcoin is the only thing in the world universally acknowledged by every rational, intelligent person is Bitcoin is a commodity. Everything else you're going to see people disagree on and fight over and litigate politically, and there's a war that will go on. And so what I think is there's 10,000 things that people are going to fight over. There's one thing that is institutional adoption. It's clear. So it's like asking me which of the 10,000 mobile apps would I suggest I should invest in. My answer is none of them, because there's a 99% failure rate in startups. So I'm not going to recommend you invest in a company. Which of 10,000 buildings should you buy? I don't know. Which of 10,000 pieces of art should you buy? I don't know. I mean, that's your business, right? If you want to do that, you do that. The only thing that I'm here to say is Bitcoin is a digital commodity. If you want global money, then it has to be a commodity. It cannot be a security. Right? I'm not going to tell you to buy Apple stock. Apple stock will not be a store of value in China in 100 years, right? I mean, even Tim Cook would tell you that. So the world is very complicated when you get into securities and other types of investments. The idea of Bitcoin is, what if we had a global money that was based on a crypto network that's decentralized and ethical? I stay in my lane generally, and I say you should buy Bitcoin, don't sell your Bitcoin. Bitcoin's good, I like Bitcoin. It's an ethical commodity. Everything else in what I'll say about everything else is the rest of the digital asset ecosystem is a bunch of good ideas with a lot of regulatory uncertainty and competitive uncertainty and technical uncertainty. So they're all interesting ideas. Digital currency is interesting, it's very controversial. Digital tokens are interesting, they're very controversial. Digital securities are interesting, very controversial. Digital exchanges are interesting, they're very controversial. I have no recommendations one way or the other. I just think they're complicated.
Jason.
Institutional adoption of Bitcoin is a key theme in Saylor's narrative. He points out that major financial institutions and entities are increasingly recognizing Bitcoin's value. For instance, MicroStrategy has acquired over 200,000 Bitcoins, leveraging various financial instruments to do so. Saylor envisions a future where major financial institutions like JP Morgan or Goldman Sachs offer loans against Bitcoin holdings, further integrating it into the mainstream financial system. Saylor describes Bitcoin as a groundbreaking economic protocol. He likens its discovery to the development of base 10 mathematics or the metric system. Bitcoin, in his view, is the first thermodynamically and mathematically sound economic protocol in history. This understanding sheds light on why traditional forms of money, from seashells to fiat currencies, have failed to provide a stable store of value. Bitcoin's fixed supply and decentralized nature ensure that its value cannot be eroded by inflation or centralized control. Saylor believes this makes Bitcoin an ideal asset for those who do not trust traditional banking systems or national currencies.
Well, for example, MicroStrategy has more than 200,000 Bitcoin. I just borrowed 1.4 billion last week. That's DeFi, right? And so how do we do that? We did that working with options market, convertible debt market, the NASDAQ spot market. IBIT, is a BlackRock application. Sometime in the next year to 2 years, I'm sure that major wirehouses like JP Morgan or Goldman Sachs will give you loans against that. That's a different way to do it. There's a bunch of crypto approaches, right? At the end of the day, the issue of do you want to be able to get yield on your, by the way, you can get yield. The people that bought my convertible debt, they're getting yield, right? And so there's a lot of ways to get yield. There's a lot of ways to generate credit. They all come with counterparty risk. And the question is, which counterparty do you want to trust? And sometimes we trust somebody like FTX or Genesis and they let you down. Some people don't trust the CME or NASDAQ. Some people don't trust whatever. I would never endorse anything. What I would say is that there's 100,000 experiments that will run. The answer is going to be different in Singapore than it is in China, than it is in the US, than it is in France. And it's going to be different 5 years from now than it is right now. So all these are morphing. But I do think that Bitcoin at the end of the day is the highest quality capital. It is the most credit-worthy thing because you've got transparency to it 24/7, 365. We have a situation where the credit markets and the payment markets are immature. There's a huge amount of work to be done over the next decade to build out all of these various parts of the financial universe. And like some people will do it very enthusiastically, like Sam Bankman-Fried was very enthusiastic, didn't know what he didn't know, and blew up. Other people will go slower, but they'll go slower, but they'll do a better job. And the answer will be different for every type of entity. So I am enthusiastic, but I don't think there's any one answer. I think it's a market economy. And so Bitcoin is the first time that we actually discovered a thermodynamically sound, mathematically sound economic protocol in the history of the world. So I think we will date things before Satoshi and after Satoshi. And I think that you can't think of it as a network or as a product. You have to look at it as a protocol the human race discovered, like base 10 math's a protocol, like the metric system's a protocol, like English is a protocol. And so this is the first sound protocol, economic protocol in the history of the world. Now we finally realize why seashells and bales of tobacco and fiat currency and gold coins and silver coins and copper tokens and glass beads and the giant stone coin of the Yap people. We understand why that stuff never worked. Now you know. If you really understand Bitcoin, it's because I've got an asset where the energy has a half-life of forever, and the half-life of energy in gold is 30 years, and the half-life of your money or your energy in the dollar is 10 years. And the half-life of your energy in the bolivar is 1 year. And now once you understand that basic breakthrough, now the light bulb goes off. So I think all the smart money, all the smart people in the world that don't trust the bank, don't trust the currency, want to keep their money, they're all discovering Bitcoin. It's like all the smart people decided to use math and use this language, and now what happens in the future? Well, stuff will advance, but you're going to have a trillion, then a 10 trillion, then $100 trillion network, and if someone comes up with a new crypto algorithm and it's better, we're just going to fold it into this network. And if someone comes up with another twist or tweak, we're going to fold it in the network.
Saylor envisions a massive expansion of the Bitcoin network, growing from its current trillion-dollar scale to potentially $100 trillion. He anticipates that any new advancements in cryptocurrency technology will be integrated into the Bitcoin network. Enhancing its functionality and security, Saylor's optimism is rooted in the belief that Bitcoin's fundamental properties will attract smart investors and institutions worldwide. As more people recognize Bitcoin's potential as a store of value, its adoption will accelerate, driving its market capitalization to unprecedented levels. Please like and subscribe my channel.